Great, great. So good evening, everyone. Good evening. How are you doing? How are you this evening? Great, perfect. Thank you very much. Thank you. So welcome to our first session here. Welcome to our first session. This is management accounting. This is management accounting, MA. This is management accounting, MA. And remember that this is one of the units that we have at the CPA intermediate level. This is one of the units at CPA intermediate level. Before I proceed, we have some good news today. It happens that when we are having our first session today, the results for the past examination sitting for December have just been released today. So I know that probably some of us were still waiting for the results to be out. So the results have already been out. And of course, those who are in our classes, they have a reason to smile. Those who are in our classes, they have a reason to smile. So you who have not joined us, contact us on 07 59 39 9820. Contact us on 07 59 39 9820. So the moment you call that line or you text on WhatsApp, then you'll be certain. So call us on this line to do what here? To join our CPA classes. Contact us on that line to join our ongoing CPA classes. Remember, we have just started our CPA classes. We have just started our CPA classes, and we are moving forward. So, ladies and gentlemen, there's no reason for you to sit back waiting for some miracles to happen. Someone is saying that, well, I do not have enough fee to proceed to register for classes. Don't worry. If you do not have sufficient fee to enable you join all the classes, it happens at times. This is management accounting. And remember that we also have what we call financial management, also another unit at the intermediate level. If you have successfully gone through those units, then we also understand this. At times, you may have some constraints, especially financial constraints, that may limit you from doing this. Don't mind? Contact us on 0759 39 98 20 to join our classes. Should you not have all the fees, we have a waiver, and you can start with a deposit of as low as 1,000 shillings per unit. You can start with a deposit of as low as 1,000 shillings per unit. Remember that our total fee here is what? 4,000 shillings. Our fee here is 4,000 shillings per unit. We charge a fee of 4,000 shillings per unit. So instead of paying the 4,000, you can make an initial deposit of 1,000 shillings per unit, and you start your classes. I'd advise all of you who is here that start your classes in good time. All right. Now, we proceed. We're doing an introduction to management accounting. We have just started. We are wasting no time. Remember that April is not far from today. And one of the most important things that I wish to mention even before we proceed is nothing beats early preparation. Nothing beats early preparation. So if you start preparing early, then come April, you'll be a smiling machine. But when you wait till the deadline, then you might not like it. Things might go right, but you might not like it. So I advise my students, please join early. Join and start early. Join and start preparing early enough. Now, we look at management accounting. Now, management accounting basically just involves the study of how really organizations can do what? Can reduce their costs. How organizations can do what here? Can reduce their costs. How organizations can reduce their costs. This is a very, very easy unit. This is a very, very easy unit, which really my students don't fail. If you've been to my class, then you will not fail this unit of management accounting. Remember, the enemy here is only one. Who is this? This is Kasneb. That's the only enemy. But all of us here in class, we are friends, all right? We are all friends here. We only have one enemy. We only have one enemy. Otherwise, all of us, we are friends. We are all friends. Now, management accounting is a unit that has 10 topics. Management accounting is a unit that has 10 topics. So today, we are going to look at an overview of these units in management accounting. We are going to look at an overview of these topics in management accounting, because that is where we start from. So starting from next week, we shall definitely start our content within the syllabus coverage. So today, we are looking at the scope of management accounting. Today, we are looking at what here? The scope of management accounting. What is involved here? What do we expect to learn? It is important to start with what you want to learn first before we go to it. Now, topic 1 here is what we call the context of management accounting. Topic one here is simply the context of management accounting. So contact that number to join what here? Our CPA classes. Contact that number to join our CPA classes. So just like I was saying, we have topic one of management accounting, which is what here? The context of management accounting. Topic 1 here is the context of management accounting. The context of management accounting. So basically here, we are going to look at an overview of really what should we expect from this particular topic here. That is topic 1, the context of management accounting. So here, we shall look at the following. Number 1, we shall get to know what is this management accounting that we are talking about. What is this management accounting that we are talking about? So we shall look at what? The definition of management accounting. Then number 2, why should we really study this management accounting? All right. I mean, why should we study this management accounting? Why should we study management accounting? So why management accounting? Is it really important to the management? Is it really important to the management? Remember, ladies and gentlemen, that at the end of a financial year, there are different reports which you generate, all right? There are different reports which you generate. Some of these reports, ladies and gentlemen, are meant just for internal use, all right? They include what we are calling the management reports. They include what we are calling the management reports. There are some reports that are meant for external parties, all right? There are some financial reports which are meant for external parties. Who are these? These are, for instance, here the shareholders, all right? These are here, for instance, the shareholders of your company. So why is it important that we study management accounting? Why is it important? Why is it important that we study management accounting? So we shall look at why management accounting. Why management accounting? Why management accounting? Why management accounting? Then once we look at this, we shall look at who are the users, all right? Who are the users of management accounting? Who are the users of management accounting? We look at what here? The users of management accounting. We look at the users of management accounting. The users of management accounting. The other aspect is limitations. Are there any advantages? Remember, we have looked at why should we study management accounting. So are there any advantages associated with this management accounting concept? Do we have what here? Any limitations of management accounting? If yes, what are these limitations? If yes, what are these limitations of management accounting? What are these problems of management accounting? Then really, what problems is management accounting trying to solve? What problems is management accounting really aimed at solving? We look at problems that are being solved here by what? By management accounting. We look at problems that are being solved by management accounting. And ladies and gentlemen, that will give us a quick overview of management accounting. Remember that this is a unit that is a combination of both theory and calculations. And really, there are a lot of calculations. So everything here, this is theory. Everything here, this is theory. This is theory, no computation here. No computation here. And if you ask me, and you ask any of my students who've been to my class, I don't start with topic number 1. No, I don't do that. I don't start with topic 1 because this is simply theory. This is simply theory. So I don't start with topic number 1. Normally, I will not start with topic number 1. I will tell you why once we start with the topic that we start with. I will tell you why. So that will be our topic 1. That will be our topic 1. Then that shall now lead us to topic 2. That shall lead us to topic 2. That will now lead us to topic 2. That will lead us to topic 2. So let's see what is there in topic 2. Let's see what is there in topic number 2. What is there in topic number 2? What is there in topic 2? Let's see what do we have in topic 2. So topic 2 here. And topic 2 is simply what we call what here? Costing terms. This is now what we call costing terms and concepts. Costing terms and concepts. Costing terms and concepts. Costing terms and concepts. That's topic 2. Costing terms and what here? And concepts. Costing terms and concepts. Costing terms and concepts. Costing term and concepts. Remember here, the main interest in this topic number 2, which you're calling costing terms and interests. I want to take you back to what I had said before. Remember, ladies and gentlemen, that management accounting is basically all about doing what here? Managing costs. Management accounting is all about managing costs. How do we reduce our costs? You should remember, and you should have this in mind, that that's always the aim of any other organization outside there. The aim or the main objective of any other organization is to ensure that they maximize on their profits while minimizing on their costs as low as possible. So management accounting really deals with, well, how do we minimize these costs? So in this topic, the costing terms and concepts, here we shall basically have more focus on the aspect of costs. So here we shall look at classifications of costs. Do we have any categories of costs? Classifications of what here? Of costs. We have got different types of costs. How do we classify costs? How do we classify costs? So that is number 1. Classification of what here? Classification of costs. Classification of costs. How do we classify costs? How do we classify costs? Ladies and gentlemen, they might sound a little bit strange. Don't mind if they sound strange. It's your first time being here, right? But good, you are here. By the time you are moving to examinations, everything shall be well, and you'll be smiling moving to the examinations, all right? So number 1, we look at classifications of what here? Of costs, classifications of costs. And then number 2 area here, we look at the basis for doing what here? For classifying costs. The basis for classifying costs. The basis for classifying costs. I know someone is now wondering, Mwalimu is not telling us what was said in the last paper. This is what Mwalimu has been doing. At each and every introductory class, we've always had to know what was there in the past paper, and definitely Mwalimu gives the predictions. What should we expect in the next paper? Don't worry, that shall happen, all right? It's well taken care of, so that shall happen, that shall happen. You shall know what was there in the last paper and what do you expect in your next paper. What was there in the last paper and what do you expect in your next paper? So definitely, we shall cover that. We shall cover that. You need not to worry. You need not to worry, all right? Now, costs, here we are talking about the basis for classification of what here? Of costs. The basis for classification of costs. Remember, ladies and gentlemen, that costs are really classified based on different categories. Number 1, it may be based on the function of the cost. It may be based on the functions of the cost. Number 2, it may be based on the variability. It may be based on what we call variability. It may be based on what we call what here? Variability. Variability. So those are, for example, the 2 bases for classification of what here? Of costs. Those are, for example, the 2 bases for classifications of costs. We shall look at some, all right? We shall look at some. This is just a quick highlight of our cost outline, all right? Remember, we are looking at the cost outline. So generally, in topic number 2, this will be our main focus areas. Okay, this will be our main focus areas. Then they are talking about classifications of costs. Remember, we have here direct costs. We have what you call here the indirect costs. We have got overhead costs and other types of costs. We shall look at that in topic number 2. And that shall now lead us to topic number 3. Well, we said we have a total of how many topics? 10. We have a total of 10 topics in MA. So in topic number 3, then, we look at the introduction now to cost estimation. We have now known what is this cost accounting? What is this management accounting? Why management accounting? Who are the users of management accounting? What are the limitations of management accounting? What are some of the problems that are being solved by management accounting? We have known that, yes, generally, management accounting is all about managing costs. We have known here, ladies and gentlemen, how to classify our costs and the basis for the classifications of costs. The big question now goes, we are now starting our real work now in management accounting. So really, the real work here starts from topic number 3. The real work starts from topic number 3. And this is where now most of your examinations start coming from topic number 3. And by the way, just to make it clear, topic number 3 is very, very critical for your examination. This topic that you're about to handle here is very, very critical for what here? For your examination. It was there in the last sitting of December 2024. I will show you which question specifically, but it was there. Let's go to topic number 3 and see what do we have in topic number 3. What do we have in topic number 3? What do we have in topic number 3? I hope you have written this, but don't worry. I will provide you with the course outline. I'll provide you the course outline. Of course, those who are paid, I'll provide you the course outline in the paid group. We have got the paid group. So those who are there, those of you who are paid and are in the paid group, I'll share the course outline there. Now, topic number 3. Topic number 3 is now what we call introduction to cost estimation. Good, you heard me right. Introduction to cost estimation. Introduction to cost estimation. Introduction to cost estimation. Introduction to cost estimation. Now, ladies and gentlemen, if you meet a question from this topic in the examination, in any examination, please smile. Even if the paper was hard, but you meet a question from topic number 3, please give it a smile. I mean, don't be so much frowned in an examination room. No. The examiner might think, what's up? All right? So smile, give it a smile. And of course, just like I've said, you'll always get a question from topic number 3. These questions are very easy to handle. Of course, we shall look at so many examples and we shall see how do we handle these questions from topic number 3. So should you meet any question from this topic number 3, what have I said? Give it a smile. The paper might be hard, you might have been frowned, but should you meet any question from topic number 3, get happy. Let's see why. What do we expect here? Now, remember, I will take you back to your high school or probably your campus, those who did your degree and did a degree, for instance, here in BCom or business administration. You must have looked at what we call the cost function. And remember that all costs are estimated using this cost function. What is this cost function? The cost function says y is equals to a plus what here? B x. Y is equals to a plus b x. Ladies and gentlemen, this is the main cost function. Irrespective of the method used to estimate cost, this is always the starting point. Should you meet a question on cost estimation, please, the first thing that you need to remember is the cost estimation function. What is our cost estimation function? Y is equals to a plus b x. That is the cost estimation function. Ladies and gentlemen, allow me to spend a little bit of time here, all right? Allow me to spend some few minutes here. Now, once you know this cost estimation function, what next? You need to know what is meant by each of these, all right? What is meant by y? what is meant by A, what's meant by B, and what is meant by X. We need to know what is meant by Y, what is meant by A, what is meant by B, and what is meant by X. Ladies and gentlemen, Y is simply what we call here the dependent variable. Y is simply the dependent variable. Y here is the dependent variable. Y is the dependent variable. Y is the dependent variable. Then what is this A? A is what we call the fixed cost. A is what we call the fixed cost. Remember that there are normally two major categories of costs, all right? That is fixed cost and variable costs. Remember that fixed costs, whether you have produced or not, whether you have a level of activity or not, you must incur them. Ladies and gentlemen, whether you're going for a job or you're not going for a job, if you stay in a house, you must pay your landlord. That's a fixed cost. It's also called what here? The intercept. It's also called the intercept. The intercept is simply the point at which your chart cuts the y-axis. That's what we call the intercept. So the point at which x is equal to 0. The point at which x is equal to 0. That's what we call the intercept of the fixed cost. B is what we call the variable cost per unit. B is the variable cost per unit. B is the variable cost per unit. And then, of course, we have x here, which is now what here? The independent variable. X here is the independent variable. It's also called the predictor. It's also called what here? The predictor. It's also called the predictor. So it is the independent variable or simply the predictor. It is the independent variable or simply what here, ladies and gentlemen, simply the predictor. The independent variable or simply the predictor. That is the cost equation. My focus was that you understand what the cost equation is and what is meant by everything in the cost equation. What is meant by everything in what here? In the cost equation. In the cost equation. In the cost equation. Now, once we understand that, we now move on to the next level. We now move to the next level. And what is this? We are now looking at the methods of cost estimation or simply the methods of estimating costs. We now move to the next aspect and now we look at methods of estimating costs. Methods of estimating costs. Methods of estimating what here? Costs. The methods of estimating costs. Methods of estimating costs. Method of estimating costs. The methods of estimating costs. Is there anybody who can tell Mwalimu here? Just a trial. I know it's your first time joining this class, but well, there are those who read ahead, all right? I know there are those who have started reading, and there are those who know these things. So any methods of estimating cost that you know, any methods of cost estimation that you know, let Mwalimu know here. Which methods of cost estimation do you know? Any methods of cost estimation that you know here, talk to Mwalimu here. Talk to me here. Talk to Mwalimu. Any methods of cost estimation which you know. Any methods of cost estimation which you know. Very good. Thank you very much. I don't know who is this. I can't see the name, but thank you very much. It tells me regression method. Very good. We have, let me write it like this. The simple linear regression method. The simple linear regression method. We have got the simple linear regression method because remember that there are also other types of regression analysis, but at your level, you deal with the simple linear regression method. At your level, you deal with the simple linear regression method. Method two. Method two. Method two. Very good. Thank you. The high-low method. Perfect. Very good. We have got the high-low method. Number 2 here is the high-low method. Number 2, we have got the high-low method. Number 2, we have the high-low method. The high-low method. Number 3, scatter graph. Very perfect. My students here. My student. The scatter graph method. The scatter graph method. Number 4 here we have what you call the accounts analysis method. We have the accounts analysis method. Number 4 is the what here? The accounts analysis method. Number 4 here we have the accounts analysis method. Accounts analysis method. The accounts analysis method. Perfect. Accounts analysis method. Number 5 here we have engineering methods. Engineering methods. Engineering methods. engineering methods, engineering methods, engineering methods, engineering methods, and finally, we have what we call the learning curve. Finally, number 6 is what we call what here? The learning curve. The learning curve. The learning curve. But the learning curve method, anyway, this was transferred. This was transferred to where? To advanced level. This was transferred to advanced level. So at this level, we'll not look at the learning curve method. At this level, we'll not look at the learning curve method. The learning curve method will be covered for at the advanced level. The learning curve method will be covered for at the advanced level. So here, we shall only focus on the 5. That is the simple regression method, high-low method, scatter graph method, accounts analysis method, and of course, the engineering methods. There was a question on cost estimation from the last paper. Let me just confirm what was the exact one that was asked. Just a minute. Just a minute. Just a minute. December 2024. December 2024. December 2024. December 2024. December 2024. December 2024 here. I'm just looking at the exact cost. I'm just looking at the exact question. I'm just looking here at the exact question. Oh, all right. There was no question. There was no question on cost estimation. Yeah. There was no question on cost estimation. Yes. I will tell you what was said from topic number 3 before we continue. There was no question on cost estimation. Perfect. Good. No, good. No problem. No problem. There was no question from there. There was no question on cost estimation from that particular topic. All right. Good. So that is what we have there. Then now the next thing, once we know the methods of cost estimation, the next we need to know the advantages, the disadvantages, and how to arrive at the cost functions using the above methods. So for all these methods, we need to know, number 1, their advantages. For all these methods, we need to know, number 1 here, their advantages. Number 2 is their disadvantages. Number 2 is their disadvantages. And number 3 is how do we arrive at the cost function? How do we arrive at the cost function using each of these methods that we have stated here? We shall be able to cover that. We shall be able to cover that. We shall be able to cover that. And then, of course, next here is topic number 4. Next here is topic number 4. Topic number 4. Topic number 4. Next, we go to topic number 4. I hope you have captured that. So next, we go to topic number 4. So the main thing that you need to remember in topic number 3 is the cost equation y is equals to a plus bx. Understand what is y, understand what is b, understand what is a, and understand what is x. And understand what is x. So next here, we go to topic 4. We go to topic 4. We go to topic 4, which is simply cost accumulation. Cost accumulation. Topic 4 is all about cost accumulation. Cost accumulation. Cost accumulation. And ladies and gentlemen, when you talk of cost accumulation, then look, you might have different departments that are generating income. Each and every department, ladies and gentlemen, have got their cost. Each and every department have got their own income that they have generated. Your accounting method really classifies your incomes very well based on how each department is generating revenue and how each department is spending. The question then is, should this department fail to raise sufficient revenue to cater for its costs? What do? We shall transfer costs from one department to cater for that particular department. All right. So if we talk about cost accumulation, we are talking about the accumulation and the distribution of costs in each department. We are talking about what here? The accumulation and distribution of costs in each department compared to what here? Compared to the actual output to get the departmental costs. So we are going to, number one, accumulate the costs. Once we have realized that, look, we have a total cost of 8,000. How should each department cater for these costs? We have got our marketing department. We have the HR. We have here procurement. Maybe we have what here? Production. We have the production department. We have the production department. So how should each and every department come in to cater for this cost? We are now distributing the costs to different departments. We are now distributing the cost to different what here? To different departments. All right. So that is simply what is involved in this particular topic. So in most instances, that's what you're going to look at. Now, remember here that, ladies and gentlemen, to get our total cost, okay, to get what here? Our total cost. To get our total cost, we need to have here what we call the direct material cost. We have direct material cost. Direct material cost. We have got the direct labor cost. We have direct labor cost, direct material cost, direct labor cost. We have got the direct material cost, direct labor cost, direct labor cost. Should we have any other direct costs that the examiner have not been specific? We have got the direct material cost, we have direct labor cost, and any other, we add any other direct costs. We shall add any other direct costs. We shall add any other direct costs. Remember, when we add the three, we add direct cost, we add the direct material cost, we add the direct labor cost, and we add any other direct cost that the examiner has not said. What we end up with here is what we call the prime cost. We shall add that, we shall add that, and then at the end, we shall get here what we call what here? Prime costs. At the end, we shall get here what we call prime costs. Prime costs. So prime cost in most instances is normally made up of two elements. Number one, direct material cost, and number two is the direct labor cost. In most instances, the prime cost is made up of two major elements. Number one, direct material cost, and number two is the direct labor cost. The direct material cost and the direct labor cost. Now, once we get this, then what we shall do here is simply to add what here? We shall add what we call the production overheads. We shall add here production overheads. We shall add 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 production overheads. The production overheads. The result that we get here is what we call the total production cost. The result of what we get here is what we call the total production cost. The total production cost. Remember that production overheads, this is made up of what here? The over and under absorption. The over and under absorption costs. This is made up of over and under absorption costs. So we may have over absorption and we might have under absorption. We may have over and under absorption. That's what we shall have there. That is simply what we shall have there. So again, we shall look at what comprises of direct labor, what comprises of direct materials, all right? What comprises of these any other direct materials that have not been mentioned here, all right? What is this over and under absorption of overheads? We look at the next element here is apportionment of costs to departments. Apportionment of costs to what here? To departments. We shall look at apportionment. We shall look at the apportionment. We shall look at apportionment. Apportionment of costs. Apportionment of costs to what here? To departments. Apportionment of costs to departments. Apportionment of costs to departments. Apportionment of costs to departments. All right. Apportionment of costs to departments. How does each department get about all these costs? How does each department get to be accountable for all these costs that we are going to incur as a business? So we look at the apportionment of costs to departments. So there are really a lot of things that we might consider here. Like, for example, let's say here, for example, we have something like rent. Rent is a cost. So how then shall we, or what basis shall we use to apportion this cost of rent to each and every department? So there shall be basis. for apportionment, we are now distributing the basis for apportionment of costs. We can look at something here, like, for example, what we call it, the floor, the area. We can look at something like the area. If we want to apportion something like rent, we want to apportion like something like rent cost, we shall look at the area coverage of each and every department. You shall look at area coverage of each and what here of each and every department. So there are really a lot of factors that we'll have to consider here. You know, we have got other costs here, like, for example, talk about electricity. Talk about costs here like what here? Electricity. Talk about costs like electricity. Talk about costs like electricity. If you talk about something like electricity cost, then once again, we can use the area coverage to determine what cost do we estimate to this particular department? What is the area covered by this department? All right. So we look at things like what? Like area. We look at things like area. We have got things like depreciation. We have things like depreciation cost, which we can look at what? The net book value. We can look at the net book value of the assets, determine the depreciation cost. We can look at things like the net book value. We can look at the things like the net book value. Now, once we're done with that, we shall go to what we call here stock management. We shall go to what we call what here? Stock management. Stock management. Stock management. And in stock management, there are really some key terms that will be critical for us to understand here. There are some terms that will be very, very much critical for us to understand here. What are these terms? These are really what are involved in stock management. And at the end of the day, the main term normally in stock management is what we call the EOQ. What is EOQ, somebody? What is EOQ here, somebody? Thank you. The economic order quantity. The economic order quantity. The economic order quantity. For us to get to the economic order quantity, ladies and gentlemen, there are certain aspects or there are certain terms that we must understand. Number one, we have what we call the reorder level. The reorder level. We must understand here what we call the reorder level. Number two, ladies and gentlemen, we must understand here what we call the maximum stock level. We must understand what we call the maximum stock level, the maximum stock level. The reverse of that is what we call the minimum stock level, all right? The minimum stock level, the minimum stock level. Remember, ladies and gentlemen, the reorder level is the point at which you need to make a new order. The maximum stock level is the highest amount of stock that you can hold within your store at any given point in time. The minimum stock level is the reverse, the lowest amount of stock that you need to hold within your store at any given point in time. At any given point in time. We have got the average stock level, the average stock level, the average stock level. We have got here the average stock level, the average stock level. We have what we call here the periodic stock, periodic stock, periodic stock, the perpetual stock or inventory, perpetual stock or inventory. We shall look at all these, so don't worry about it. All right, the perpetual stock. We have got the supplier purchase price. Of course, this is perpetual stock management. Sorry, perpetual stock management method. We have here the supplier purchase price. Supplier purchase price. Supplier purchase price. Which any other term do we need to understand here? Yeah, the ordering costs. Very good, thank you. We have ordering costs, and finally is the holding costs. Finally is the holding costs. Finally is the holding costs. Once we understand all this shall lead us to what we call the economic order quantity. The economic order quantity. Once we understand that, that is what we call now the economic order quantity. And ladies and gentlemen, normally when you look at the economic order quantity, we are looking at, well, what is the minimum stock level that needs to be ordered so as to minimize costs as much as possible. Of course, we shall do an example here and you will understand how this works. What is the minimum stock level that needs to be accumulated, that needs to be purchased at any given point in time while minimizing the costs as much as possible? Economic order quantity, economic order quantity. The economic order quantity is mostly for the buyer, not for the supplier. So here, the most important thing that we need to understand here is the economic order quantity formula. The economic order quantity formula. Where do I write it now? So economic order quantity is equals to what here? The economic order quantity formula says it is equals to the square root. It is equal to the square root of 2 times what here? Times demand, times what here? Times the ordering cost. 2 times demand times the ordering cost. And then the whole of this, you divide by the holding cost. You divide this by the holding cost. You divide this by the holding cost. So we have 2 times demand times the ordering cost divided by the holding cost. That is the formula for economic order quantity. Very important. Very important. Very important. The formula for economic order quantity, very, very much important. Very, very much important. And then finally, in this topic, finally in this topic, we have what we call stock valuation. Stock valuation. Stock valuation. And here, once again, you get a question from here, give it a smile. You get a question involving stock valuation, give it a smile. Give it a smile. Why? It's a walkthrough. I mean, when I tell you it's a walkthrough, it's a walkthrough. Methods of stock valuation, FIFO, LIFO, and the weighted average. FIFO, LIFO, and the weighted average. Those are the different methods of stock valuation. So we need to understand the concept of stock valuation and methods of stock valuation. Very important. First in, first out, last in, first out, and the weighted average. FIFO here stands for first in, first out, last in, first out, and then we have got the weighted average method of stock valuation. That shall lead us to topic 5. Sorry. I'm now going with speed. I'm now moving with speed. I'm now moving with speed. If I go too fast, tell Mwalimu, no, please reduce your speed. If I go so very, very fast, tell Mwalimu, no, please reduce your speed. Please reduce your speed. So we go to topic number 5, activity-based costing. Topic 5 is what here? Activity-based costing. Activity-based costing. What is most commonly abbreviated as what here? The ABC costing. The ABC costing. Activity-based costing. Activity-based costing. Activity-based costing. Activity-based costing. So here, basically, we shall look at what here? We shall look at different types of goods here. Like, for example, we have got what we call joint goods or products. You have got what we call here the byproducts, basically. Those are now goods which are in the area of what? We look at goods and generally we look at the processing costs of these goods, all right? We look at the processing costs of these goods. So there are some goods that must be processed maybe at the same time, all right? And then, of course, we all know that the resultant of production is basically we must have byproducts. So, well, how do we account for all this? How do we account for all this? There are services involved. There are services involved. And then, of course, we need to look, how do we apportion our joint costs? 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 That will lead us to the end of what? Product costing. That will lead us to the end of product costing. That will lead us to the end of product costing. Then we go to topic number 7. ABC costing. Whatever I've told you is something that we call what here? Product costing. Sorry. That is product costing. That is product costing. Product costing, which is actually topic 6, not topic 5. That's topic 6, not topic 5. Sorry about that. We go to topic number 5 now. We now go to topic 5. We now go to topic 5, which is now ABC costing. Topic 5, which is now what here? ABC costing. Topic 5, which is now ABC costing. Activity-based costing. So under activity-based costing, the most important things that we look at here, number 1, is the traditional, or generally what we call the conventional, traditional or basically conventional costing, traditional or conventional costing, traditional or conventional costing. We look at the ABC costing itself. We look at ABC costing itself, and here we need to know the advantages. This is a question that is very, very much commonly set. The advantages and what here? And the disadvantages. The advantages and the disadvantages of this ABC costing. The advantages and the disadvantages of this ABC costing. The advantages and the disadvantages of this ABC costing. This one is theory, And then, of course, we shall end with what here? The calculations, or basically computation. How do we arrive at cost function using ABC costing? How do we arrive at the cost function using ABC costing, right? Now, topic number 7. Remember, I've given you an overview of topic 6. So we go to topic 7. We go to topic 7. Topic 7. And topic 7 is basically absorption and marginal costing. Absorption and marginal costing. Topic number 7 is absorption and marginal costing. Topic number 7 is what here? Absorption and marginal costing. Ladies and gentlemen, someone smiled in December 2024. Somebody smiled here in December 2024. Just a minute, let me show you. Just open your drive link, and if you open your drive link, go to question number 2. Go to management accounting paper, question number 2 of December 2024. There is also a question from what we have just looked at from our previous topic, that is topic number 6 on product cost. We are being asked for question 2A, distinguish between joint products and byproducts. Haven't we mentioned that? Yes, we have done. Haven't we defined them? We haven't defined them. We shall define them in our next class. So do what? Join us. Join us here so that we learn this together. Join us so that we learn this together. I mean, distinguish between joint products and byproducts. 4 marks. 4 marks. All right. And then we have got part B, which we are being asked to prepare a profit or loss statement for each of the 2 periods using each of the following presentation methods. Number 1, marginal costing. Number 2, absorption costing. How many marks? 16 marks. 8 marks for absorption costing, 8 marks for marginal costing. A total of 16 marks. Oh, didn't you smile? We'll see why you need to smile. We will see why you need to smile. We will see, or rather we shall see here, why you need to smile if you get a question from this particular topic. If you get a question from this particular topic, we shall see why you need to smile. Topic 8. So here there's nothing complicated. It's just knowing how to do marginal costing and how to do absorption costing. I've not given you the format. People are wondering today, Malim, what are you doing? Why not giving us the formats that you used to do before? Don't worry. I will give you in the next session. All right, topic 8. Topic 8 is what we call what here? CVP analysis. Topic 8 is what we call CVP analysis. Another reason to smile. If you get a question on CVP analysis, ladies and gentlemen, I mean, you should smile. Where possible, laugh. Smile, and where possible, laugh. Why? That's a very, very important area that you will tackle very, very fast. Now, remember that this is always also called, many people may also call it, the break-even point analysis. The break-even point, what here? Analysis. The break-even point analysis. CVP or break-even point analysis. CVP or simply the break-even point analysis. CVP or break-even point analysis. Here, ladies and gentlemen, the most important things for us to know here. Number 1, assumptions of CVP analysis. Very important. Very, very important. Assumptions of what here? CVP analysis. The assumptions of CVP analysis. That's the first focus area. Number 2, we look at the limitations of CVP analysis. All right. Number 2 is the limitations of what here? CVP analysis. Number 2 is the limitations of CVP analysis. Those are the only theories. Assumptions of CVP analysis, that's number 1. And number 2 is the limitations of CVP analysis. Ladies and gentlemen, next is calculations. Calculations. And under calculations, what do we need to know? We need to know how to get what we call the break-even point. How to get the break-even point. Break-even point for what? For single products. And number 2, how to do a break-even point for multiple products. Where we have multiple products, how do we do the break-even point? How do you do the break-even point for multiple products? How do you do the break-even point for multiple products? Of course, again, we have something that we call margin of safety. We must know how to calculate the margin of safety. We must know how to calculate what we call what here? The margin of safety, the margin of safety, and of course, what we call here the target profit. Margin of safety and 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 target profit. Don't worry, Mwalimu is going too fast. Mwalimu is going too fast. Time is not on our side. Time is not on our side. We need to finish this so that in the next class, we start our classes. Topic 9, budgetary control. Topic 9 is what here? Budgetary control. Budgetary control. Hii ndio ilileta shida, budget. Budget. Each and every person I know, we do prepare our budgets. Each and every government must prepare its budget. Either both national government and county government, they must prepare their budgets. Each and every organization must prepare their budgets. Each and every department within the organization must prepare their budgets. They must prepare what here? Their budgets. They must prepare their budgets. Now, budgetary control. Here we look at number 1, the importance of what? Having a budget. We look at the importance of having a budget. Why should we have a budget? Why do we need really to have a budget? We look at the importance of having a budget. What is this budget? What is this budget? All right. What is this budget? What is this budget that you're talking about? What are different types of budgets? What are different types of what here? Types of budgets. What are different types of budgets? What are the different types of budgets? What are the different types of budgets? Theories. We move to computations. We need to computations. And in our calculations here, ladies and gentlemen, in our calculations, ladies and gentlemen, we have what we call a functional budget. How to do budgeting, how to prepare a functional budget, how to prepare a functional budget. Number 2, we shall look at how to prepare a sales budget, how to prepare a sales budget, how to prepare material usage budget, material usage budget. We have got material purchase budget, material purchase budget. We have what we call the flexi budget. We have what we call here the flexi budget. We have what we call the cash budget. Though these ones, in most instances, we classify them under functional budget. We classify them mostly under functional budget, all right? Then that shall lead us to topic 10. That shall lead us to topic 10, which is now what we call standard costing and variances. Topic 10. Topic 10 here. Topic 10. Topic 10, standard costing and variances. Topic 10 is called standard costing and what here? And variances. Standard costing and variances. That is now topic 10, standard costing and variances. Standard costing and variances. Here we look at budgeted costs vis-a-vis actual costs. So standard costing and variances, all right? So here we want to determine the variances. So we look at the budgeted cost, actual cost, and then of course, the result is what we call a variance. That is simply the difference between budgeted cost and actual cost. The difference is what we call variance. And then finally, we have applications of management accounting. Applications of management accounting. And ladies and gentlemen, if you get a question of this kind, it is normally a question that is there free marks. In fact, they might even give you 10 marks. They might ask you maybe to explain or list any applications of management accounting. If you get that question, just list all the topics. Just list all the topics in management accounting. Just list all the topics in management accounting. List all the topics in management accounting. You shall get it right. List all the topics in management accounting, you will get it right. Ladies and gentlemen, that will bring us to the end of our class today. That will bring us to the end of our class today. I never introduced myself or my new students, but majority of my students that I can see here, we have been at the previous classes. I can see many students here. We have been at the previous classes. For those who are joining me today for the first time here, my name is CPA Julius Obura, and I was your instructor, and I'm going to be your instructor for this. So ladies and gentlemen, if you want to join our classes, I will repeat once again. If you want to join our classes, I'm going to repeat once again. Contact us on 0759399820. Our fee for CPA classes is only 4,000 shillings per unit. You can have a commitment fee of what here? 1,000 shillings per unit. You can have a commitment fee of 1,000 shillings per unit. Our classes have started, but our marathon is starting officially on Monday. Our marathon is officially starting when? On Monday. So please ensure that by Monday, you have joined us. Ensure that by Monday, you have joined us. Ladies and gentlemen, that will be the end of our class today. As I leave, nothing beats early preparation. Nothing beats early preparation. Ladies and gentlemen, congratulations to all our students who are smiling today after they get a positive result. Thank you, ladies and gentlemen. Have a blessed evening. Bye-bye. See you in the next session.